Live from London, I'm Mark Barton.
And from New York, I'm Vonnie Quinn, and this is Bloomberg Markets. It's time now for futures in focus. Both oil and gold falling today. Tropical storm Harvey halting refineries and reducing crude demand, while gold is falling from a 10-month high as North Korea fears a bait for the moment. Joining us from the CME to discuss all of this is Tim Evans, Chief Strategist at Longleaf Trading Group. Tim, we've seen another refinery shut down, and it looks like we're not done yet. Landfall for a second time today, earlier today. What's that doing to the market? Obviously, crude oil is dropping, but there seems to be a bit of a floor there.
Hey, nice to be with you, Vonnie. Yeah, I mean, the news continues. Obviously, this is a very fluid situation. It's going to continue to be that way. I mean, last night, announcement that the Motiva refinery shutting down in Port Arthur, Texas. I mean, that's a big development. So that takes the U.S. capacity down to 20% of overall U.S. refining capacity offline, and that basically keeps about 3.5 million barrels per day of crude production kind of stuck in the system, having to find storage. So really, that's going to leave this market very backed up, and obviously that's a very bearish factor. But the argument I've been making to our clients at Longleaf is that the intermediate term fundamentals have actually improved. I mean, this very bearish, unexpected, unplanned for event, is creating this negative price movement. But to the point that you're suggesting, I think we're seeing some support in the market, and that's reflecting the more intermediate term fundamentals, again, which we think are a little more bullish.
So the premium for gasoline over crude is at a 16-month high. Do you anticipate that premium going higher? And also the spread between Brent and WTI, where is that going to go for the time being?
We think, based on, it's going to be very difficult for funds, large investors, to bring the type of volume that can really turn the tide of the crude oil or bring the spreads down between crude and distillates or Brent and WTI. We think there's still going to be a few more days of these spreads possibly widening. If you look at the RBOB contract, getting from a technical standpoint, we think we're, headed to really technically overbought levels. So we think we could be seeing a blow off top there here in the coming days. So we're actually going to be looking for these spreads to tighten. We just think it's a bit early to begin acting on that today.
Tim, gold is off its highs, and there are probably many reasons, but one of the reasons that it had reached above 1,300 was North Korea, obviously. Now, the president tweeted again this morning, and it wasn't exactly the friendliest of tweets. So why is the market relaxing all of a sudden?
Well, the U.S. dollar, there's been a very strong negative correlation between the U.S. dollar index and gold here over the last month. When the U.S. dollar index broke below that 93 handle, that's when gold was finally able to make that run through that 1303.5 level, which had acted as that resistance point going back to the November elections. So once we were able to make it through there, obviously it kind of cleared the path for upward movement, and that's kind of where we stand now. I think the development with respect to North Korea has quieted down a little bit, so I think gold is consolidating based on that. But what was resistance at 1303.5, in our view, is now support. So we think as long as that 1303.5 level holds, we can look to a good challenge that the highs that we saw on the night of the elections in November at 1353.
1353. All right. Tim Evans, Chief Strategist at Longleaf Trading Group, with today's Futures in Focus. Thank you.